I hope everybody's having a great weekend here. Take a look at my recent article I wrote about on there's no fever like gold fever. And the reason I focus on gold is two things. One is looking at a historical perspective, 100 years of history. What does the Dow gold ratio tell us? Historically, it would take 1 ounce of gold to buy the entire Dow index, which is the 30 stocks. So where is it currently right now? So if we take a look at it, we can take a look that the Dow to gold ratio is a simple ratio. You take the Dow index divided by the price of gold. Currently, it's about 51,000. Gold is about 4,300. That gives us a ratio about 11.9. Over the years, I'll show on a graph to you guys that as it gets very high, like it did in 1929, we had the crash. As you can see, the price of gold became more expensive. So 1 ounce roughly would buy you the entire Dow. So here, the peak was about 20. You can see that as it continues to go up at high levels, uh, the Dow Industrial Average is an expensive place to be and it's better to buy gold. So from 1970 to about 1980, gold peaked. Then we had the dot-com bubble burst. It took about 40 ounces of gold or 45 ounces of gold to buy a Dow index. But as you can see, when it got too high, the stock market crashed until it became to more normal levels. So right now, I believe we're about 12. I think it still has to go to the single digits. I can easily see gold going to about 8,000 to 10,000. And the reason is multiple folds. One is that we have high inflation. There's a lot of stagflation going on. And you can come to my Mr. Market Substack if you want to read the details of it. My focus really was here to kind of show you where we stand right now and why I think gold keeps going up. We have massive amounts of debt right now in the US. I mean, it's 125% of GDP. So we have a lot of debt that keeps going. So that's good for gold because it's really a protection against the US dollar going down and currency debasement. What's happening around the world? Central banks keep buying China, India, Turkey, all around the world. A lot of people are diversifying away from the US dollar and makes it more expensive. That's why over the years, you can see the price of gold from 2000, $275, it has gone up to almost 4,000. I mean, that's about 11% return just holding on to gold. Uh, can't tell you there's a lot of geopolitical uncertainty around Ukraine, Iran, the Middle East, and that also appeals to gold. And that's why gold prices keep going up. Real interest rates, as you can see, they're still about 4 to 5%, but it's still not beating inflation. Inflation, go to the dollar store. It used to be a dollar, now it's about $1.50. So as you can see, inflation keeps going up. And so that's one of the reasons. I think there's a lot of stagflation, political uncertainty. You shouldn't chase gold, but I think based on where we're right now, gold has gone up a lot. And I see continuing over the years that gold will continue to go up and take that ratio from currently at 12 to single digits, probably six or lower. So happy trading, hold on to gold, especially the physical gold, and have a great day. We'll talk again soon, everybody. Take care now. Bye bye.